Hello there, Maverick Currency traders. This is Rob Reinhold, and it is April 10th, 2024, and today was CPI day, and we actually had two central banks as well. In this session, we're going to get into the news of the day. I already mentioned most of it. We're going to talk about what that means, and then we take a look at the market, fresh look, give everything a score from +3 to -3, and then we pair together the best versus the weakest, and those are our trading symbols for the next 24 hours.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
All right, so this is where we were 24 hours ago. We said that the Aussie Kiwi was the only thing showing some strength and a whole bunch of stuff showing weakness. Now that definitely changed in a second with the CPI report. So let's go ahead and jump in and see what the news of the day was. Before we get to the CPI, last night we had the RBNZ. So the RBNZ came out and they were more hawkish than the market expected. They said that their rates are going to stay higher for longer than people to expect. That was a little bit of a surprise to the market since the RBNZ has been more dovish than the RBA in Australia. Looks like that has changed to where they both are more hawkish than the market expected. We then heard from the Bank of Canada this morning, and they kept rates steady as expected, but they left the door open for a June rate cut. The CAD actually went up today, not as much as the dollar, because that CPI came in hot. 0.4 on the headline number and 0.4 on the core. Markets were looking for +3 on both numbers. This is what the market didn't want to see. The market wants rate cuts this year. They're pricing in rate cuts, and it doesn't look like they're going to get them. So what was the effect on currencies for the day? Well, you can see a whole lot of nothing in the middle. European currencies pretty much completely dead today. We saw some selling in the Aussie and Kiwi, and we saw the big jump in the dollar. That's really the story today. Those currency crosses, that's where you wanted to be trading. CAD was a close second. Well, not even all that close second. But we'll take a look at the CAD chart. I do want to look and try to see if there's anything other than dollar that's working right now. We take a look at the overall broad markets. It was a down day, but off our lows. The S&P at one point was down 1.3% on its lows. It closed a little bit off of it. You can see the world index -1% as well. Cryptos, they went down today, but Bitcoin and Ethereum actually were slightly positive for the day. Gold took a little bit of a break from its red hot run that it's been on, and the oil keeps grinding higher. In the world of crypto, as I mentioned, Bitcoin and Ethereum both eked out small gains. The big loss was in Bitcoin Cash, and we talked about Bitcoin Cash over this past week. Whenever it has a big run, it really likes to give it back. So short-term trading on Bitcoin Cash for sure. We know that that's a story with that crypto. Let's take a fresh look at the S&P chart, and you can see we've definitely deteriorated. We were solidly above the 20-day moving average, and you can see this last little move, it tried to bounce last Friday. It tried Monday, held on. Even yesterday, it recovered. It just wasn't enough. People want to be in there buying. You can see the last 2 days, there's long lower shadows, but we've come a long way. We might be in for a little bit deeper pullback than what a lot of people were thinking was likely to happen. That's why we are downgrading our market outlook. We're now more to +1 here. We're mildly bullish here, but we do have to be realistic on the situation in the markets. Let's take a look at the calendar for the next 24 hours. Up next, we have inflation out of China. And then tomorrow morning, we get the ECB. If you are looking to trade euro, you need to be on your toes on this. Make sure you understand that this could move the euro quite a bit. I don't think it's going to because, look, the euro has not been in play all that much. It's been one of the lower volatility currencies. So unless the ECB says something that's wildly different than what we've heard, then I don't think it's going to be much of anything. I am not watching this to make any sort of play off of it. We do have the PPI coming out of the US tomorrow morning. A cooler than expected PPI could help the risk on trade. It could. So if the PPI comes out as expected or lower, people might look at this CPI number and say, hey, you know what? The PPI leads the CPI a little bit. We think those are going to come down a little bit as well. The PPI is not as big as the CPI. I would say it has about half the market impact. So the CPI sent the market down 1.3%. I think the PPI might send it up 0.5% if it comes out better than expected. If it comes out worse than expected, then I think you can add that -0.5 onto today's loss that we saw in equities. Let's take a look at some of the currencies that moved. We'll update our trade board and then we'll look for actual trades. I'm going to start off with the crypto basket here. I want to take a look at the cryptos as a basket and really just see where they are. And you can see this is not great trading activity here over the past little bit. The only trading activity has been to buy at the low of the range, sell at the top of the range. That's really not my jam in crypto whatsoever. I like to get these runs in crypto. I like to go after the big runs in crypto and then let it do its thing until it's ready to go again. So for me, crypto is just not all that interesting right here, right now. Let's take a look at the dollar chart because the dollar is the move here. You can ignore that candle. That's bad data here, but big move, big breakout. You can see this is a daily chart, big breakout. We could run all the way up here before we meet the next resistance on dollar. Dollar is absolutely bullish here. I mean, there's no question. Dollar is bullish. Dollar is in play. We did have a big day today. I would not be surprised if we get some sort of pullback or consolidation, but we want to be buyers of that pullback and consolidation. You can see right now, we had this big release of energy. We could easily pull back. Let's talk about some numbers here. Pull back here again. This is the dollar basket. We'll take a look at some individual dollar trades. I think a slight pullback, you could take a look at potentially buying dollar longs. Yen. Look, I still like yen short, but we got the Bank of Japan out there with the threat of intervention. But you can see this thing wants to be short. I like to be a seller on rallies because that gives me a lot better idea that the Bank of Japan is not going to come in and intervene. If I can get in on rallies like this right here, much better place to get in. You know, I think you could go short yen. I just think it's a very tricky trade. And if you want to be cautious, don't be short yen when the Japanese banks are open. That is the most likely time that the Bank of Japan is going to make an announcement. So if you avoid yen during those times, you can cut down some of the risk. I want to take a look at Canadian dollar to see, are we getting anything in the CAD that really excites us? The CAD has generally been going up slowly for this year. We've come back down off a high. It's not a bad looking bull pullback, but it's also not a good looking bull pullback. For me, I wish the CAD would show me a little bit more to be excited about. Looks like the dollar is the only thing to go long. Really, look at everything else. Nothing else looks like it is a good idea to go long. Let's go look for something to go short. Again, the yen, I think, is acceptable. Here is the Aussie. And you can see the Aussie had a nasty day today. That is a nasty candle today, but it didn't do anything to damage its uptrend. It's still above the 20, it's still above the 50-day moving average. This is still an uptrend here, and frankly, I think it's a better chance to look to be buying Aussie than shorting it. So if I'm wanting to find something to sell against the dollar, Aussie is not it, even though that was the best trade today. It's not looking like the best trade tomorrow. Here we have the Kiwi, and I'm liking this much better. We've had a nice bear rally on the Kiwi. We came up, hit this resistance level, turned down. For me, it's just a matter of getting the timing right on Kiwi. We've had a big move down over the last 12 hours. Give me a little bounce. Give me a little bounce, rally, or a base to short into. I think the Kiwi looks really good on the short side. Here is our velocity scoreboard at the moment, and you can see we've got a lot of stuff to sell, but not much to buy. We have dollar and CAD on the long side, and we have Aussie, yen, and Kiwi on the -2s and -3s. So those are the pairs we're looking to pair up together. Dollar's going to take the top spot on the long, and Kiwi's going to take the top spot on the short. That is the pair we're going to be starting out with, dollar Kiwi. Look, there's been a big burst of energy that was made today. We have to understand that after big bursts of energy, there's typically a little bit of consolidation. We easily could get a day or two of some sideways action here. Any rally, I want to be a seller. Any rally. So if the Kiwi dollar can rally up to this 59.95, I think this is a great place to start looking for a short position on Kiwi dollar. So 59.95. Right now, we had such a big explosion of energy. I don't think you can chase it here at all. I think you've got to let this consolidate and then make a move. A break below 59.65 would be the bottom of any base that it makes. That could be an entry point there as well. As you can see here, I like the cross. I just don't like the timing of it. Timing isn't looking great. The other cross I want to take a look at is dollar yen. Really, really nice looking breakout. But remember, 152 is where everyone is saying if it goes above that, the Bank of Japan is going to intervene. Now, obviously, the Bank of Japan is the most likely to intervene during business hours in Japan. There could be some intervention here tonight. I know I'm going to be a little worried about that. I am being hands off on dollar yen tonight, but tomorrow morning, I would love to see a pullback in this pair to 152.50, even all the way back to 152. Give me an option to buy it down here. I would love to hold this for the next 24 hours until the next time the Japanese banks open, and then I do want to be on the sidelines for that potential intervention. As you can see here, nothing is just jumping off the screen to me here. In those situations, what do? We trade less. We don't look to push trades. We say, hey, let's keep our powder dry. Let's wait for a better opportunity. We still have 2.5 full trading days this week. There's plenty of opportunities. No reason to get into something right here when the setups aren't great. That is a currency recap. Thanks for joining me. Goodbye.